Hey everyone, Kevin here. So there's been a lot of talk about this potential mortgage crisis leading to basically a foreclosure crisis after this pandemic ends, which is like the last thing we want. We're supposed to, or a lot of us are here waiting to buy some stocks or whatever for this V-shaped recovery to happen, or, oh, it's gonna take a little longer for our stocks to go up and it's gonna be a U-shape. Well, now we're hearing, well, what if instead of a U or a V, it's a W? That is, we recover and then up foreclosure crisis. So a lot of us, we hear mortgage crisis and we're like, oh crap, what is going on, whether or not we own real estate? And then there are those of us who own real estate who want to apply for mortgage forbearance. That is the right to pause our payments or to freeze our payments, so to speak, or defer our payments. And there are even problems with that. So what the heck is going on? What is the Fed doing about this? They just issued an update on this. And what is this going to mean for us? Let's talk. So first of all, here's the gist of what's going on. When we can't make our payments, this is us, when we cannot make our payment because our tenant stops paying us or we lost our job and we can't pay, that means we cannot send our payment to the person who collects our money, known as the loan servicer. The loan servicer is somebody who collects our payments and helps redistribute that money to all the people who basically down the line own little mortgage-backed security bonds. It's kind of like you buying treasury bonds. Instead of you buying treasury bonds to invest in and get like a tiny yield on your money, you buy mortgage bonds because somebody told you that these mortgage bonds were AAA rated, and no rating agency would ever be incentivized to mislead you on the rating. But anyway, you buy mortgage bonds because they offer you a tiny little bit of a higher yield. And so basically what's happening is when we stop making our payments, there are ripple effects. Gee, imagine that. Not too complicated. But you know what? The federal government, via the stimulus bill, the CARES Act, has said that servicers must work with borrowers and allow them not to make their payment for periods of 180 days and possibly extend that for another 180 days for any kind of federally backed 1-to-4 real estate, which is most of us. Now, multifamily, like 5 units plus for residential, you kind of get 30-day options, but I've talked about that ad nauseum in other videos. Let's now talk about what's actually practically happening and the real problem this means for us. Last week I made a video talking about what you need to know when you request mortgage forbearance. And essentially I warned that if you don't follow the correct steps of asking for mortgage forbearance, you might end up backing yourself into a corner where you end up getting foreclosed on. Well, yesterday, NPR did an article on this by interviewing couples who are requesting mortgage forbearance. And what NPR found was essentially what I had warned of, that if we say, hey, do you mind if we stop making our payments, let's say for 90 days, servicer says, all right, fine. But at the end of those 90 days, you're gonna owe us those 3 payments and your 4th payment. So you're gonna owe us a total of 4 months on 1 day. Well, that's insane. All that does is set you up for foreclosure. And here's literally what the NPR investigation revealed when people were calling their servicers. Their investigation was conducted on a mortgage company called Freedom Mortgage, and Freedom Mortgage said that under current federal requirements, those amounts, that's these right here, the ones you're not paying, are not added to the end of the mortgage, but are rather due at the conclusion of the forbearance period. AKA, all of these payments are due on the 4th month, which is insane. Like, who could possibly afford that, especially during a crisis? Nobody can make 4 payments all at once. So NPR ended up calling the Department of Housing and Urban Development and found out that for FHA, and this probably also applies to Fannie and Freddie Mac, but they only talked to the FHA department. FHA said FHA never requires a lump sum payment at the end of the forbearance period. In other words, what a lot of these servicers are doing is basically creating their own rules. And so this was really interesting and has a big impact for you, especially if you're a homeowner, and especially if you need forbearance. See, the most realistic thing for mortgage forbearance is these 3 payments that you can't make in, let's say, April, May, and June are added to the end of your loan, so you just have to keep paying your regular regular monthly payments for an extra 3 months at the end of your 25 or 30 year or 20-year period, whatever's left of your loan. That makes sense. It's just like having 3 extra payments, like at the end of your car payment or rent payment, but you're still living there. Like, that's okay. It totally makes sense. But to lump sum pay this is ridiculous. And so NPR ended up confronting the mortgage servicer. And when NPR confronted the mortgage servicer, Freedom Mortgage, NPR said the mortgage servicer said, quote, "We're not saying the payments can't be added to the end of the loan at the termination of the forbearance period. Freedom Mortgage is required to follow the government guidance for blah, 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 blah." In other words, what's basically happening is mortgage servicers are worried and squeezed because they need this money to be able to make the payments they have to make to these investors, the people with the mortgage-backed securities. And because of that, they're basically trying to screw the little guy, the mom and pop homeowner or the mom and pop landlord, by tricking people into believing that there are no other options. You have to pay back this lump sum right away, or get some kind of loan modification or short sale, or go into foreclosure if you don't end up making all these bulk payments after your sort of little grace period that you get. Well, that's ridiculous because it's unreasonable. And so the Federal Reserve finally caught wind of this madness. By the way, if you have not yet gotten your 2 free stocks with Webull, make sure to do that. I've actually got Webull up on screen right back here. And I'll tell you, it's been probably my favorite app so far for actually operating trades at extended hours and tracking what the market's doing. I have this up on one of the screens like all day long. I know there are a bunch of them like this out there. Trust me, I've used like 7 or 8 different brokers. This one's not bad. Well, yesterday the Federal Reserve swooped in, finally, because this is the comfort people need right now to be able to fight the servicers and get their $0 mortgage payment. That is, actually have a forbearance period and try to have leverage with the banks to get their payment added to the end of the loan. The Fed finally released this, which this, by the way, this release is a sign of what's to come, which I'll talk about that and implications in a second. But look at this letter here. The Federal Reserve released this, and they start off the letter by kind of reiterating that the CARES Act creates forbearance and that, this is supposed to protect borrowers from a negative credit reporting, due to accommodations related to this national emergency. They also clarify that financial institutions, aka banks and lenders, are not expected to designate loans with deferrals due to this crisis as past due, and they kind of just reiterate some protections for consumers. But right here is where kind of the threat comes in, and this is the juicy part. So it's right here. This is great because this is a statement but also a threat. The agencies do not expect, the agencies, by the way, are the Federal Reserve and the Consumer Financial Protection Bureau, and I think there's one other one. The agencies do not expect to take a consumer compliance public enforcement action against the institution, aka the government does not expect to have to punish you banks as long as, in their words, provided that the circumstances were related to the national emergency and that the institution made good faith efforts to support borrowers and comply with consumer protection requirements, as well as responded to any needed corrective action. In other words, the government and the Fed, because they're not technically part of the government, but they're still like a regulatory body, the government and the Fed will not punish banks as long as they make a good faith effort to work with borrowers. In other words, this bullcrap has to stop because this isn't good faith. There's no way any servicer can say, I made a good faith effort to help a borrower by saying, yeah, just don't make your payments for 3 months and then pay up 4 months at the end of that term. That's nuts. So if you want to request that $0 mortgage, that forbearance period, and you need leverage to try to help you get your payments added to the end of your loan, I highly, highly encourage you to make sure you do the following. Number 1, reject any option that requires you to make a bulk payment or somehow puts you into a situation where you're not actually going to be able to fulfill those terms. The last thing you want is to agree to some kind of repayment plan only because some representative told you, oh, well, if you end up having problems with that plan, just cut us back later. No. Don't do that. That's gonna put you down Crapville Road, like credit damage and problems and foreclosure mitigation options, all damaging things with high fees. No. Stand your ground up front. You've got, look, and I mean, you've got all April because you can't be 30 days late. And I mean, don't sue me, bro, if I'm wrong, but confirm this. Generally, you can't be 30 days late on your credit until a full 30 days have gone by. So you've still got time here to negotiate with these lenders. Use that time to your advantage. Negotiate hard with these lenders. Make sure you get an in-writing repayment plan that you can work with. Most importantly, push really hard to have these payments added to the end of your mortgage. That is the best option. That is actually going to be what gives you real relief. Your mortgage payment isn't going to go up by doing that, with the exception of maybe a little bit for like insurance and property taxes. That's okay. Like if your impounds are a little bit behind, yeah, your mortgage payment might go up a little bit to catch up on those, but that's not as big of a deal as the actual whole mortgage itself. So stand your ground. If you need to reference that Fed document or that NPR article, I will link those down below, right under the spot where the 2 free stocks are for Webull and a free quote for life insurance that takes you like 3 minutes. Really fast, by the way. Some people were emailing me and they're like, oh my gosh, I did not know it was that easy to get a quote for life insurance. Like, whoa. But seriously, stand your ground. Don't get backed in. You have the Fed now backing you up. You now have the Federal Reserve in writing saying these mortgage servicers are required to provide a good faith effort to help you actually be able to get through this period. And so you have the right to be on the phone and say, I can't do that. And it's a recorded line. You should be recording the call too, by the way. When they say, hey, this is so-and-so on a recorded line. Cool, I'm Kevin, I'm on a recorded line too. All right, let's get into it. Make sure, use the keywords, say it in your recording. I don't feel like you're providing me with a good faith effort at helping me resolve this period of time where I can't pay my mortgage. Protect yourself, folks. Very, very, very important right now. In fact, if you're a homeowner or a tenant, you can go to knowyouroptions.com, which will give you options for disaster relief as a homeowner or a tenant. It'll also go into kind of terms for forbearance and repayment options, how they work, how to take action, frequently asked questions. So check that out. But this is also a really good first step, by the way, from the Fed and from consumer regulatory bodies saying, hey, look, the government is going to do whatever they need to do to make sure the little guy doesn't get screwed. And that's good. And that's the comfort we need right now, because what's happening is a bunch of baloney. The law says we're supposed to be able to enter forbearance and have some kind of reasonable expectation for repaying this. The stuff they're trying to pull is not reasonable. I get why they're doing it, but my hope is that this is just phase one, and the Fed comes in and says, look, take care of the people first, and these problems over here, let's talk about those next, but take care of people first. This is really good news for all homeowners, tenants, any small mom and pop investor. So hopefully this helps you out. Thanks so much for watching, and until next time.